Welcome back, everybody, to an episode of SILV Live. My name is Kai Hoffmann. I'm the @JR Mining Guy on Twitter and also the CEO of the Soar Financial Group. And today we've got a special silver episode. We'll focus on silver today because our guest definitely lends to that discussion. It's Rob Kientz. He's the founder of GoldSilverPros.com. Really excited to have him back on the program. He's skyrocketed in viewership, on subscribership, on Twitter and YouTube as well. I think, Rob, I had you on and people can hear you already. I've had you on when you were just started your channel pretty much. So I'm excited to have you back. You've definitely outgrown us, and your insights in silver are quite exceptional. So I'm really looking forward to discussing what is moving the price of silver these days. Before I switch over to Rob, before I bring you on the screen, please be reminded, everybody, follow us on YouTube, follow us on Twitter, hit that like and subscribe button, and let us know what you think. Use the comment function about the silver price. Rob and I will be monitoring it, and if you have any questions, we'd be happy to answer them. So put them in there. Looking forward to hearing from you. And I think that's enough. I've said enough. Let me switch over to my guest. And Rob, it's great to have you back on the program. Good to see you.
Hi, it's great to be here. Always a pleasure.
Yeah, how's your summer been going? I joked a little earlier. We've seen silver dip down to $18 mark. And how was your heart rate?
My heartbreak is not too strong. I'm basically a cycle investor, so I don't worry quite as much about the daily price movements. Of course, we track them because that's the service that we offer is, guiding people through the markets. But honestly, why I came into the precious metals dates back to, when I got laid off during the last financial crisis. I'd worked for Ernst & Young, the job, all that kind of stuff, living the American dream. And I got laid off and started looking at the economy. I was like, wait a minute, I think we're going to go through a big cyclical change here. I didn't believe that what the government had put forth as solutions to that problem back in 2008, 2009, 2010 timeframe were going to work. Of course, I'd been inside the mortgage industry doing work for Ernst & Young for a big bank, Morgan Stanley, and looking at a mortgage portfolio. So I kind of saw what had gone on from the inside. So for me, long story short, I'm in it for the long term. So it doesn't bother me as much. And there are reasons why silver price will move up and down, and we can talk about those.
Yeah, no, that's actually my opening question to get the ball rolling, because I think it covers everything, right? The question really is what is moving the price of silver these days? What made it drop to the $18 mark, but also what gave it a lift of about 15% just recently, so that we're back at now $20.50 right now per ounce.
Yeah, I think for silver specifically, it's a very heavy industrial demanded product, and so we know that both gold and silver, the prices are determined by the derivative markets. Here in the U.S., it's the COMEX. Of course, you have the London Fix, and that market as well. Those markets determine what you're going to pay, and what those markets are really is paper trading. You're trading futures positions on whether you think silver is going to go up or down. People take their bets. There are 6 big potential delivery months for silver every year, meaning if you're going to take delivery, you're probably going to do it one of those months. But the daily price movements in silver are determined on an everyday basis, every trading day of the year. So it's determined by that price. And I think why silver fell was the reason everything else has fallen this year is a liquidation. We had, economic issues, geopolitical issues. We've had inflation, a lot of factor. And I think we're in an official recession. I mean, officially, we've had the second quarter of negative GDP growth in America. I call that a recession. So you look at all those factors, and it's just a liquidation event of paper positions. And I don't think it necessarily has anything to do with the physical trade. The physical trade is booming, and we can talk about how and why we know that. But people are interested in getting the physical product. I think the price really is more a reflection of what the speculators and gamblers on the derivative markets are thinking about silver right now for the near-term future, of the next 2 to 3 months until the next big trading month comes.
Yeah, we'll talk physical in a second because it's really interesting what is happening on that side. But I want to compare gold and silver just a little bit because it felt like that gold was hanging in there fairly well, while the big tech stocks and everything else like Bitcoin, everything was sold off massively. Bitcoin from its peak lost 66% pretty much, right? Some of the tech stocks dropped 20, 30 and more percent as well. Why do you think silver proportionally lost more than gold, for example? It wasn't a safe haven investment as gold is.
No, silver is still money, and I believe it's been money for 5,000 years. I still think that people believe that. And however, silver is a different animal because we use so much of it in industry. Everything that's used to make this broadcast go live has silver in it. Every technology product, a lot of medical products, the military uses it. The space race, which is something I talk about a lot, which I don't see a lot of people focus on, is going to require probably thousands or maybe even more tons of silver. Everybody's building out. People want to build space stations. we want to put infrastructure on the moon. Nokia's got a contract to put 5G on the moon. It's right on their website. So I think eventually all the countries, as we move forward, they all want to have a space presence. It's where you put your satellites. It's where you get your intelligence. And that's going to require a lot. So as we get more into the space age, more demand for silver. But just right now, practically, it's the EV movement, it's the solar movement, it's a lot of the ESG programs that governments are putting into place, which is increasing, the near-term demand for silver. And we don't have enough mine supply. According to the Silver Institute's latest report, you can go to their website and look at it. They expect that we're going to be about 100 or so million ounces of silver short this year, looking at current demand and current supply for the mines. And we've been running, according to them, deficits for the last 4 years, if you project out to the end of 2022, which they do in their report. So we a lot of the above ground, stocks of silver are basically coming off. And so the price that, the gamblers on the market are trading doesn't really matter as much to me. I'd look more at the supply demand fundamentals.
Interesting. Yeah, I had Chen Lin on the program a couple of months ago. I think it was mid-May, and the video did phenomenally. It was probably the best video we've had on SF Live. Was talking about that silver is the new lithium, right?
Yeah.
That a lot of companies, like he's seen some papers out of China, how they're planning to use silver in lithium in solar panels, right?
And what they're doing is they found some substitutes for silver in solar, but it doesn't give the same sort of production quality. It didn't give the same sort of output. And what they're experimenting with are more like alloys using silver and other things. But in actuality, a lot of the panels coming out for China, especially, are higher efficiency and higher delivery in terms of amperage. And so those were actually required more silver. So I think the next generation of solar panels is going to require more silver than the current one because the demand for them is so strong. They're going to have to beef them up.
And they're also going to be double-sided. So you need twice as much. Right?
Yeah.
So logically, right? You mentioned physical, of course, as well. Physical is part physical for me is also industrial application, but also bullion, obviously, right? And how has that demand been going? Because I know premiums for physical silver, if you want to go to the store and buy physical silver, have nothing to do with the spot price. There's a massive premium on the physical silver, and how is that even possible? Like, maybe we explain that for a second, because we haven't had somebody on talk about bullion in a while, but also how big is that spread, and how has the physical demand been going?
So the silver spread is basically blown out. It's the widest I've ever seen it since I've been following the market. I talked to some people who have been doing this for 40 or 50 years, and they think the premiums on physical silver bullion are the highest they've been as a percentage of the price that they've ever seen as well. So the day that it's available out there, you're paying more for your silver. Why does that happen? Well, the premium is basically just the difference between the physical market reality and the derivative market. And when you go to a coin shop or you order online, you're ordering silver, you're dealing with the mechanics of the physical market. You're dealing with the refinement process to the wholesalers, distributed out to the distributors, and finally on to the end consumer. There are a lot of costs along the way for that. There's a markup every step of the way, and that's basically what the premium is. People complain about that premium and say it's not fair. This is the spot price. The spot price right now is about $21 for silver as we record this, just under it. But the premium, if you want to buy an American Eagle branded coin, you've got two parts of that premium. You've got the premium to getting the silver to make that coin for the mint, and there's a shortage of the planchets that they need. But also you've got the premium that goes because it's a highly recognized coin, and all of that goes into the price. And right now, the primary silver miners in the world, and there aren't a whole lot of them, cannot mine silver profitably at $18, $19, $20 silver. They need much higher prices. So what you're seeing is the premium is telling you what silver is actually worth in the market. The spot price are where the speculators are behind that trade. Why? Because they're just gambling on what they think the future price of silver is going to be in the next couple of months. They're not looking long-term at supply-demand fundamentals. So they'll get their information about any potential silver supply shortages after, the retail market and the wholesale market does.
Yeah. Can I ask you a naive, maybe stupid question, actually, that just like, as a retail buyer, you always want to buy the shiny coins, the shiny bullion bars, right? Can you actually buy, let's call it native silver, like that's unrefined, like as an investor, as a retail investor? And because the premium should be much lower because you don't have transportation, trucking, refining, making it look pretty, right? All those costs, you don't have those add-ons. Is that possible?
Well, I do think it's possible. It's hard to find. I mean, you can buy silver shot or you could buy nuggets. Certainly some people sell them. It's a little bit harder to get to. Most people want some sort of refined product. but yeah, I mean, you definitely can. And I have business partners who sell it. They'll cut up 1,000 ounce COMEX bars, and they'll take what's left over, the shot or the excess, if you will, and they'll pour their own custom minted bar. So I mean, you can, if you know where to look, get it in any form you want. And definitely getting something that's less processed and doesn't have a government stamp on it as a government issued coin is going to be a little bit cheaper. And there are ways to do that if you're just wanting to get bulk silver. Although most of what you're going to see on the retail level is either going to be a minted round or it's going to be a minted government coin for the most part, or some bars.
Yeah, no, it makes sense. It's difficult because you'd have to access or get access to the mines directly, pretty much. And
Yeah,
even
you do.
those,
And it's not easy for the average consumer to do that. I mean, you can go to First Majestic store and get some of their minted bullion, but not every miner really has that as an option.
yeah. Actually, no, curious question. Like, how does the First Majestic premium compare to any of the shops premium? Should be the
I
same,
haven't
eh?
shopped it in a while. When I was looking at it, it was slightly lower, although I would say their prices are more comparable to, say, just like a Sunshine minted round or a Perth Mint bar, something along those lines. So they're never going to trade at the premium that you'd see like an American Silver Eagle or even a Canadian Maple Leaf, something along those lines.
Gotcha. You said, okay, the physical demand is fairly strong from the retail side.
Mm-hmm.
What is driving that? But also, like, how's inventory? Like, how's that looking? I remember, we had the silver squeeze in February 2021. Everybody was hyped up about silver, but not much came out of it. Like, yeah, we saw that some inventory dipped, but I don't think we ever get really close. And that's my personal opinion. Like, depending on who you ask, we got close, we didn't get close to a real squeeze. But like, how is that looking right now? How are the inventories? Like, do we have to fear a second short squeeze?
Yeah, if you look at the wholesale markets, take COMEX and the London market, for example, which is run by the LBMA, and they put out the reports. And of course, you got CME Group here in the States. They're reporting much lower available liquid inventories of silver. Ronan Manley, who writes for Bullion Star, documented how we're under 1 billion ounces in silver in the London market for the first time in a number of years. And it's not just that we're under 1 billion ounces. A lot of what is stored in London goes to the ETFs, so SLV or other silver ETFs. And so it's pledged, so not all of that's free. And we suspect maybe only a couple 100 million ounces are there. And the reason we know that is when we had the original silver squeeze, what that really was people buying SLV. SLV is an exchange traded fund based upon silver. It's very limited redemption rights. If you actually want to get access to silver, it's more of a price exposure mechanism for people who want to put it in their portfolios. But they are required to buy silver to back the amount of demand for their shares. And so what happened was over a 3-day period, the last 2 days of January and the first trading day of February last year, there was a run on SLV of about 110 million ounces, which were pledged from the London vaults to go over to SLV. The LBMA came out several months later and said, you know what, in retrospect, if that had gone on for another week, we would have been bankrupt of free silver. That gave us an idea that the amount of silver demanded in the London market was much more than the actual physical availability. And that meant that there was basically a lot of paper trading going on there as well, but not a lot of physical. And since that time, Kai, about the last year and a half-ish since the original silver squeeze event, and this is something I called about 18 months ago. I said people are going to get more physical. They're move away from the ETFs and get physical. We've seen inventories drain off of the London market. We've seen them drain off of the COMEX market. In fact, of the free liquid available silver available on COMEX dating to that silver squeeze, about 150 million ounces at the time, there's only 50 million ounces of liquid silver left on the COMEX. There's a lot in private storage, but that's privately owned. It's not owned by the exchange or necessarily owned by any of the big participants on the exchange. So there's possibility some of that stored silver could come back into the market. But for the most part, the liquid silver has been in a free fall on COMEX since silver squeeze began. So I would say silver squeeze never stopped. The way I kind of looked at this is I think we'll have phase 2 where people are going to physical, and it'll be a long sort of quiet phase in which you don't see it in the price. And that's basically exactly what's happened.
Interesting. You just gave me my YouTube video title, by the way. The silver squeeze never stopped.
That's right.
That one is going to work. No, fantastic. I'm actually just looking at the 60-day silver chart, and something seemed to have happened on July 25th, 26th, because all of a sudden we're up $2 in silver. We went from $18.50 to now around $20.50. Do you know what that trigger was? I'm just curious, like, what's driving the market now? Because there seemed to be complete apathy. Like, nobody cared, gold or silver, and all of a sudden there's a 15% move.
Right? Well, I'll give you the real reason here in a second, but I want to give you some other reasons which will contribute and actually make the silver market stronger. So as you go into the fall, we typically have a strong season for both gold and silver. For gold, especially, there's the love trade for China, India, and other cultures which use gold in weddings and ceremonies and things like that. We also have that love trade a little bit here in the United States as people gear up for the holidays and buy jewelry. And I also think that does occur in silver as well, and a little bit in platinum and palladium too. So I think it's bullish for all of those precious metals markets. The real reason is, again, it goes back to what I said earlier, the spot price that you pay every day, not the premium that you pay at your dealer, but the spot price quoted is a function of that derivative trade. And what we've seen for the first time in a long time are the bullion banks flipping net long. So why does that matter? The bullion banks, if you look at the Office of the Comptroller of the Currencies report in the United States here, that's produced by the OCC, if you look at their derivatives report, if you look at the Commodities Future Trading Corporation, or Commission, their report, they regulate the precious metals market and the commodities markets. If you look at both their reports, there are 4 major banks that run most of the derivative exposure here in the US, 200 trillion worth of derivatives, and especially the precious metals as well. The bullion banks are the ones that do a lot of trading for their clients, but also their house accounts. And they always have traditionally been what's considered the smart money. They seem to be aligned with the price movements more than any other. They make a ton of money. There's an article that came out in Bloomberg that said, I think that JP Morgan was making hundreds of millions of dollars a year from trading the commodities and the precious metals market. So they make money. There's the smart money. They know what they're doing. And if you're a sovereign and you're going to come into the market, you're going to come through the bullion banks just because you're going to have that anonymity and they're going to have the gravitas to make that trade for you. And what's happened was, instead of being net short on their silver derivative positions, they went net long about that time. So they have flipped to a more bullish perspective on the silver market. Now it'd be interesting to see whether that bet was right and the bullion banks are right and when that occurs. I think they're a bit early on that. But I think that what that has allowed is taken a lot of that short pressure off of that market and allowed people to realign their position to where we think silver is going to run. As these physical silver shortages become more apparent, they're going to let the price run a little bit on the exchange to reflect that.
Interesting. Yeah, I was just curious, like what is really driving it? Is like really Fed policies. I just opened up the news here as well, and we just got U.S. producer price updates as well. Jobless claims again rise to 262,000 as well. It feels like the whole world is prepping for a bit of a precious metals market rally in the fall. Like my gut tells me, like gold wants to break out. We're scratching $1,800 again this morning as we record. How do you forecast the fall to play out? Like, what do you expect to happen? What is the Fed going to do? Because it feels like this is like the little, like in Germany, you say that das Zünglein an der Waage. It's the little, like the feather, or like the last drop in the bucket. Everybody's looking forward to the Fed rate decisions, right? And what the Fed is doing. And everybody's hesitant until the Fed has sort of made a statement. Then the market does its thing for 2 weeks, and then we wait another 2 weeks for the Fed again, right? How do you see the fall play out, and what do you think the Fed will do? And do you think the Fed is really that important?
Yeah, it seems like the Fed has got this all-important position. They're the strongest influencer in the American finance market. All they have to do is intimate something, or even you think that they're hinting at something and the market moves. They have so much control over that. And why? Because they control the Fed funds rate, which eventually trickles down to most interest rate-based products and things that people see. And it certainly affects what the big commercial banks can get their money at, but it affects things like mortgage products and bonds and things like that. So what the Fed is going to continue to tighten, and that reduces the amount of liquidity in the market. Of course, that means it's harder for industry to get things done. There's less money for them to borrow and expand. If you look at it from a consumer perspective, which is 72% of the American economy is a consumer, consumer demand with higher interest rates would tend to fall because you can afford less on the same salary, of course. And we know wages aren't keeping up with interest rates. Interest rates at 8 to 9%, the wage rate increases are more, modest at 3, 4, 5%. And it's been that way for a long time. I mean, I've traced this back to decades and decades ago in my book. The wage rates have never kept up with inflation. And I think what we're seeing now is sort of the final stages of where, the system starts to come apart because the people that are the beneficiaries of that system from the consumer standpoint and the users of that debt and the easy money policies are starting to struggle at a time when the Fed is also tightening because the Fed sees weakness in the economy. I think the Fed is deathly afraid of runaway inflation. We're not at the level where we have the inflation yet that we had, say, during the Paul Volcker years. Although, if you really pull apart the CPI and get honest with it, that number is probably really low. And we're probably closer to that than a lot of people think. I do think that whatever the Fed says is going to affect the markets. But I think what's bigger for me, Kai, is a little bit longer time frame than just the fall, if the Fed continues to tighten and we continue to go further deeper into a recession, and by the way, this would be the first time that the Fed would be tightening into a recession, into a deep recession that in my recent memory, usually they ease. But if they tighten to the recession, it's going to put incredible pressure on other asset prices, stocks, bonds, real estate. You see the mortgage market and the real estate market starting to decelerate here in the US. Of course, we've already had corrections in stocks and Bitcoin and all this other stuff. So at some point, I think the Fed's going to have to pivot either to a neutral stance or maybe to a more of a policy easing stance. We'll have to see what they do. But regardless of what they do, I think they're between a rock and a hard place with where we are right now. And I don't think that's anything but bullish for gold and silver. I don't think if they say we're going to cut rates by a quarter point, that crashes gold. And I think if they raise another 3/4 of a point, it will positively affect it. But I think the longer term game is more than just this fall. I really want to see it over the next 6 months to a year. We've had Bank of America come out and call for a pivot from the Fed to go more accommodated by 2023. We'll see if Bank of America is correct. But I agree that the Fed's eventually going to have to pivot. I don't think they can continue to tighten to a recession. It would just continue to put downward pressure on markets. And of course, gold and silver would benefit.
Based on the economic data we got this morning, and again, it's Thursday, August 11th. Like gold wants to move, right?
It does.
Like with the jobless reports, PPI fell, came in lower than expected, which is positive, right? So we should be positive because that means the Fed will have to might have to pivot. Doesn't have to increase rates as fast anymore. So we'll have to see like how that plays out. I'm fairly bullish actually on the fall. That's the stocks tell me that. What are you? How are you investing? How are you like positioned right now? How much is physical? I know you follow some of the junior miners and explorers as well. Like, how are you playing this space now? Let's assume the next 6 months.
Yeah, anybody that knows me and watches my show knows that I'm a permeable on gold and silver and have been since I wrote the book in 2009. So about 13 years, because I just see the structural problems that coming. So I agree with you. I think it's going to be a big fall and a big next couple of years for the precious metals. I think we're in a massive bull market. For the miners, I love the miners, honestly. I think they may be the most undervalued asset class that I've seen in my time writing. Certainly, I wrote for about 12 years for Seeking Alpha, was syndicated in many places before I became on social media. And in analyzing those markets, I've never seen more of a bull setup for the mining stocks. They're just trading way below their enterprise value, way below the metal value in the ground. I mean, the multiples that we would see in a healthy market for precious metal stocks are, they're much lower. You've seen, and earlier this year, the Huey and the GDX were doing pretty well. The rest of the stock market was correcting. They were up. And then because this liquidation keeps going, people were liquidating out of that sector. And that's normal. That happens during every recession. People will liquidate out of all assets. And what you're seeing is a capitulation of people that may have been in that trade for the short term. They needed money. Maybe they were margin called. Maybe they need money for other things and they got out. Or they just looked at it and said, you know what, I'll come back in at a lower price point, thinking it would continue to run lower. I do think the mining stocks are going to recover. I mean, if you look, Kai, at the last, ever since gold broke about $1,700-$1,700, the gold miners have been printing cash. They've made money for consecutive quarters. They're performing. The stock prices aren't up because there's general, especially during the summer, but overall, as we've all been through this big, massive liquidation event in all the markets, people are just apathetic. That will change, however. There's profit in it, and they're doing very well. I think there have been some big discoveries. There's a lot of good news there. And as you continue to have pressure on the regular stock market, people will sector rotate into gold and silver. It happens every time, but that comes in stages. So I do think we'll see it in stages. We'll see it stair step up, and eventually we'll get to that frenzy stage where you could throw a dart at a mining stock and probably make money. We're definitely not there yet. We're on the opposite end of the stage, but that's a buying signal for investors. Because look, at the end of the day, you want to buy when there's blood in the streets. This is what JP Morgan said. You want to buy low and sell high. Buying high and selling low is a guaranteed way to lose. So I get into trends before they happen, because that's a way to position yourself, and you just stay with the trend and be patient with it. You'll be just fine. I'm not worried at all about the miners. To me, it is a potential generational buying opportunity. It's one of those things where you see it so cheap that it's like, how could I not participate in this market? But you have to have patience. You're going to have a couple of years of patience for this all to play out. It's not something that happens overnight. It's definitely not a Bitcoin type of investment, which is a good thing because it won't rise and fall as much. But it's also a little bit more predictable. And I think for investors that are looking for that next big bull market, the mining stocks are definitely, a good candidate. I don't see how you could say otherwise, honestly.
No, it's true. Like I don't have the chart in front of me, but I just saw. I think it was a tweet yesterday or 2 days ago. How Barrick, Newmont, and all the big large cap miners sort of performed against the gold price, and
Hmm.
they've never performed so poorly against gold. And the
Right.
deviation between gold and their share price right now is insanely high. It's never been that. It's at record levels. Like
Hmm.
the gap between the valuation between where they should be historically averaged and where they're at right now. So
Hmm.
absolutely, I do fully agree. Although it's like because we're in more of an algo market, so maybe that's my own comment as well. Like the algos are trading and they see lower than expected revenues and like EPS, earnings per share, like from the big miners, they're selling them down. Like Newmont put out a fairly weak second quarter,
Hmm.
they got sold off 13% that day, right? So
Yeah, any stock that doesn't perform in this market will get punished because remember, people are very bearish right now in general, and they're not separating out the mining stocks versus the rest of the stock complex. But if you look at fundamentals of the mining stocks versus, say, the tech stocks, you look at tech stocks and their PE ratios, what
oh,
I call the PE 10 or the cyclically adjusted PE ratio for the general stock market went to the fifth quintile. And what is that? It's a statistical term that basically means it's so overpriced, it can't get any more overpriced in history, dating back, to the 1870s. So that market has to come down. And of course, people are going to sell the mining stocks because they're part of that complex, but they will separate themselves from the fact they're going to outperform going forward, especially in an era in which I think the rest of the market has to correct back down to some historical mean to price to earnings. And I think the mining stocks come back to the historical mean for price to earnings. And I think that's what you're looking at if you're a mining stock investor. And I think that'll be the story over the next couple of years.
fantastic. Rob, like where can we find more of you? Like goldsilverpros.com, obviously. And
Yeah.
what's your Twitter handle?
So Twitter is gold silver_pros. And of course, we're on YouTube as well, Gold Silver Pros as well.
Absolutely. We'll link to it. Rob, fantastic conversation. Really, really appreciate your time. Thanks for making it happen.
Yeah.
And really looking forward to having you back on. Maybe later in the fall, see what silver does. And because you're one of the silver experts I call on when I need to talk silver. So
Mhm.
really appreciate it. And thanks so much for your time. And everybody else, thank you so much for tuning in. I just want to switch camera real quick. And make sure, of course, to follow Rob. We had a great discussion about what's moving the silver price right now. And we both agree that I think the fall looks quite positive, and in terms of silver price and gold price movement to the upside. Rob, I didn't ask you for a silver price target. Do you have a silver price target?
Silver price targets are always, you hesitate to put one out there because you never know what the markets are going to do. Again, it's driven by short-term speculation. But I would anticipate, silver approaching 24, 25 as we get deeper into the year. The big driver though of silver is not going to be marginal demand. The marginal industrial demand, I'm sorry, the industrial demand's there. It's going to be the marginal retail demand. As that kicks up, you'll see that price move very, very quickly. So I would say in the short term, 5 to 6 months, probably 25 is a good target, and then we'll see where we go from there based on what's going on in the world.
Perfect. Rob, thank you so much. And everybody else, make sure to follow us on YouTube, follow us on Twitter, hit that like button, and follow Rob
Mhm.
as well. Everybody, thank you so much. And we'll be back soon with more.